Are taxes eroding your wealth? Here's how to protect it. With the 2020 income tax deadline quickly approaching, are you shelling out a lot of your earnings in tax, and are you wondering, what can I do to save on taxes next year? Did you know that you can reduce your tax liability by several well-calculated stock market investments? Not just through tax saving schemes that offer investment benefits alongside tax savings, but also through other calculated moves. Let's start with ELSS. Equity-linked saving schemes are basically mutual funds that invest in stocks. By investing in these mutual funds, investors stand the chance to earn if the stock selected and invested in by the fund manager perform well. Additionally, investments of up to Rs 1.5 lakh are eligible for income tax deductions under Section 80C of the Income Tax Act against a lock-in period of 3 years. Next up, we have short-term capital gains. A 3-year lock-in period might prove to be too much of a commitment for some of us. Investing in equities for less than a year means that any earnings you make will be treated as short-term capital gains and will be taxed at a concessional rate of 15%. Long-term capital gains. If investment term duration is not a problem and you have a slightly higher risk appetite than average mutual fund investor, then one might want to choose stocks independently rather than rely on the judgment of a mutual fund manager. Long-term capital gains are taxed at a flat rate of 10%. To offer a perspective, fixed deposits are also taxed at this amount, but without the probability of high earnings in the event that the stock performs well. Moreover, there is a basic exemption of up to Rs 1 lakh. Our financial maneuver for today's discussion is losses made on the stock market can be offset against profits made on the stock market. You are probably thinking, well, this is all very well, but how does the stock market work? Well, you are in luck. We have a whole collection of videos, podcasts and blogs that can help amateur stock market investors wrap their heads around key concepts, jargons, commonly used trading techniques and the various charts and indicators used by stock market traders, just like this one. The Section 80C of the Income Tax Act 1961 is very significant. Under this section, investments of up to Rs 1.5 lakh in a financial year are exempt from taxation. Tax saving and wealth building almost always go hand in hand. टैक्स सेविंग आपके इनकम को ऑप्टिमाइज करता है और आपके पास ज्यादा पैसे बचते हैं टू सेव, स्पेंड एंड इन्वेस्ट. इसीलिए टैक्स प्लानिंग इज क्रूशियल. Here's how you can utilize 80C deductions to save tax and build wealth. चलिए देख लेते हैं कुछ पॉपुलर इंस्ट्रूमेंट्स दैट प्रोवाइड टैक्स डिडक्शंस अंडर 80C. 1. Equity linked saving schemes ELSS. ELSS एक म्यूचुअल फंड स्कीम है with investments in a diverse range of equities. The interest earned is tax free and compounded annually. इसका lock-in period है 3 years, the shortest of all investment options under 80C. You can invest lump sum in an ELSS or opt for a monthly SIP. 2. Public Provident Fund. Payments made towards PPF are invested in government bonds and securities. PPF में invested amount, interest gained और amount upon maturity, ये तीनों ही चीजें टैक्स फ्री हैं. PPF का लॉक इन पीरियड है 15 years, तो ये एक PPF अ लॉन्ग टर्म इन्वेस्टमेंट होता है. 3. National Savings Certificate NSC. NSC is a fixed income investment scheme by the Government of India for individual citizens only. It can be opened with any post office. NSC का 5-year लॉक-इन पीरियड होता है और इंटरेस्ट रेट फिक्स्ड रहता है. The rate is revised every quarter for new deposits. 4. Life Insurance Policies. आपको इंश्योरेंस कवर देने के अलावा लाइफ इंश्योरेंस पॉलिसीज आपको टैक्स सेविंग्स में भी हेल्प कर सकती हैं. Any amount paid towards life insurance premium for yourself, your spouse or your children is eligible for deductions. 5. 5-year fixed deposits FDs. फिक्स्ड डिपॉजिट एक सेफ फाइनेंशियल इंस्ट्रूमेंट है जिसमें आपको गारंटीड रिटर्न्स मिलते हैं अगेंस्ट योर कैपिटल. Any fixed deposit with a scheduled bank for a tenure of 5 years qualifies for deduction under Section 80C. However, interest earned on this deposit is taxable. हमने जो टैक्स सेविंग इंस्ट्रूमेंट्स डिस्कस किए, उसके अलावा यू ऑल्सो कैन कंसिडर ऑप्शंस अंडरलाइंड इन सेक्शन 80C like Employee Provident Fund (EPF), ULIP, National Pension Scheme (NPS), and others. But remember, irrespective of number of investments, only a maximum number of rupees 1.5 lakh can be claimed for the 80C tax deductions. For more resources
Welcome full-time investors, part-time traders and everyone in between. In this video you will understand ELSS mutual funds and how to invest in them. एक म्यूचुअल फंड एक बास्केट की तरह है. इस बास्केट में स्टॉक्स, डेट, कमोडिटीज और दूसरे फाइनेंशियल एसेट्स रखे जाते हैं. In ELSS funds, a big portion is dedicated to stocks, but some portion is also reserved for debt-backed instruments. Stocks capital accumulation में हेल्प करते हैं और debt-backed instruments risk मैनेज करते हैं. Hence the full form of ELSS, equity-linked saving schemes. These mutual funds help you save money, but the returns can be higher than traditional savings accounts as they are tied to equities. ELSS funds have the lowest lock-in period. ELSS funds can have the highest percentage of returns. Here is how to know when ELSS funds are the right fit for you. ELSS funds suit busy investors who have a shorter time horizon and greater risk appetite. If this sounds like you, then you should learn more about ELSS funds. You can find and invest in the top ELSS funds of India on the Angel Broking app.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.